Good morning. Welcome to the third quarter 2022 video conference of MDS Branco. We have with us today Gustavo Lopez Theodosio, Vice President of Investments and Controllership, and Fabio Safali, new Business and Investor Relations Officer. We'd like to inform you that this event is being recorded, and that during the presentation, all participants will be only in the listening mode of the presentation. After that, we will begin the question and answer session for analysts and investors. This transmission is also being realized simultaneously via YouTube at www.youtube.com/RIMDS. We would like to clarify that any statements that might be made during this teleconference relative to the perspectives of the business of MDS Branco, projections and operational goals and financial goals, are beliefs and premises of the management of the company, as well as information currently available. They involve risks and premises as they refer to future events, and therefore depend to circumstances which may or may not occur. Investors should understand that general economic conditions, industry, and other operational factors may affect the future performance of MDS Branco and lead to material differences in the results. Now I'd like to pass it over to Gustavo, who will begin the presentation. Gustavo, please continue. Good morning to everyone. Welcome to our presentation of the third quarter 22 results. Let's start with the third slide. Slide number 3, with the highlights of the company. This shows the net revenue of the third quarter, which is another quarterly record. We closed the quarter with 2.9 billion in net revenue. Another highlight is our average price of 6.2 reais per kilo, which is important in the company. Accompanying our pricing model, this price has been growing. This is the 4th consecutive quarter of increased prices. So have been able to price in constantly since the beginning of the pandemic and in the Russian-Ukrainian war, and we continue in this trajectory. The volume of sales were also superior to the same quarter of the previous year, 6% higher, and also grew in relation to the previous quarter, second quarter of 22, by 15%. We closed with 482,000 tons, and due to the increase in price of all the inflationary pressures, the volumes continue to be quite high. Our SG&A, our continuous expenses, continue to be very well controlled, as they have been over all of our history, at 18.4% of our net revenue, a 1.2% reduction in relation to the third quarter of 21. Our EBITDA, 333 million reais, being 16% growth in relation to the third quarter of 21. Another important highlight was the acquisition of the company Las Acacias, a Uruguayan company, and we're going to talk about that a little bit as we go along. The reason why of the acquisition and what this company means and the results. And in a few slides, we'll talk about that. We continue with the important recognition. The Adria brand was named for the 3rd consecutive year top of mind brand in the spaghetti and pasta area. MDS Branco was listed on the 100 most innovative companies in the IT area. We continue to be part of the Teva Index, which represents women in leadership. And we had the good news recently 2 weeks ago that MSCI has upgraded our rating from A to AA, which shows our commitment with the ESG practices in a very important rhythm, which has been consolidating our journey, our ESG journey. Looking at slide 5, just to remember you, I'm going to go into this theme of the acacias, and then Fabio can continue with the presentation. I'll be back at the end for the Q&A session. But there, in the Las Acacias, we had a growth plan here in Brazil and several avenues for growth here in Brazil. We also looked at the entrance into other categories, the acquisitions in that direction, as well with Martinex and Jasmine, and other categories such as granola, Hansen, and gluten. And now we've entered into the pillar that we've talked about quite a bit, which we hadn't done as yet, which is the internationalization. We started with exporting. We export to 40 countries, more than 40 countries, an area that has grown greatly. But at some point in time, we understood that it was important to start a greenfield or even through an M&A to take better advantage of the competitive position, to give us a more competitive position in those countries in which we operate. So whether it be due to local knowledge, questions of tax law, eventually, and the closeness of a much loved brand by the local consumers. And so that's what we've done with this recent acquisition of Acacias. The strategy, the growth strategy, is we're going to grow more and better in the right channels with a portfolio which is more adequate, the revenue management which is more adequate, and all of this supported by programs, productivity programs and efficiency programs, and maintaining our expenses under control. Looking at the Las Acacias question, a recent acquisition, the first outside of Brazil. It's a small acquisition, but very significant for the company, which will mark this first step. It's a company which essentially, in relation to the culture and the age, it's very much like M. Dias. It was founded in 1952. On the 12th of October of the last month. It's a company which is run by two brothers currently, one of whom will stay with us until December, which is more in the industrial area, and then will leave the company after that. He wasn't doing much in the company, and the president of the company, who will stay with us for 1 year, with the possibility of renewing for an additional year. Las Acacias is a brand, for those who know the Uruguayan market, which they know it's a very relevant brand with a good store presence on the supermarket shelves. It's the principal brand for volume. It's the second brand similar to Las Acacias, and then you have Las Acacias. It's a factory and a central distribution center in Montevideo, the largest market in Uruguay. They have company-owned trucks, 100% company-owned trucks, and their DC is also company-owned. It's a company muito bem ajustado, very well adjusted, has EBITDA margin of 14% for the last 3 years. So different from other companies that we have acquired, who with a large gap of a scale-up possibilities in our distribution center. Here it's a different thesis. It's a mature company with in good margins, but as part of the M. Dias Branco's family, M. Dias Branco family, it will leverage greatly both our profitability as well as our sales. Firstly, because it's a company which is focused on pastas. The brand has the capacity to bring along other lines of products. We have a relevant possibility with the Bento Gonçalves factory. From Bento to their headquarters, it's only 800 kilometers. So there is a synergy eventually for our flours and even cookies, which today Acacias does not produce. So the first acquisition, naturally 120 million reais in purchase price, and we follow the MGS Branco Melo, which is to look at things, pricing things with very conservatively, one step at a time, without following our strategy. I spoke a lot about pasta, but pasta is the heart of the company, but pasta represents almost 80% of their sales. But they also work with different types of flours. It's basically almost a co-packaging. It's they buy it already processed and packaged by local mills, and they sell it under their brand. One of the first synergies that we see here is that we can have a reserve capacity, which is important. We inaugurated the Bento Gonçalves mill, a very modern mill in Bento, with more than 40% of reserve capacity. And it could be a route for us to use this reserve capacity in Bento Gonçalves to have better prices and leverage the sales of flour with the best margins in Uruguay. They have some types of rice. They have these, they have some condiments as well, and oils. So it's a portfolio more diversified than of M. Dias, but they operate in categories in which we do not operate, condiments and rice, but it does not produce them. These are co-packaging, which it imports or brings in from other countries, from Italy, as far away as Italy, from Brazil, and other European countries, but it does produce the majority product that they produce is pasta in their production units. I'm going to pass it over to Fabio to talk a little bit about the results, the revenue, market share, expenses, our costs, and our cash position. And after that, I'll be back for the question and answer session. Thank you, Fabio. Go ahead. Thank you, Gustavo. Good morning, everyone. I'm going to continue the presentation, starting with the revenue and market share chapter. The principal highlight in our revenue, we had at the same time growth in volume sold and growth of the average price, which in comparison to year-on-year comparison between the third quarter of 21 and the third quarter of 22, as well as in the quarter half year by half year. This is both in volume as well as in average price. And in the accumulated for the year, the volumes have grown 1% and the average price 29%, totalizing a record revenue, which Gustavo mentioned, of almost 3 billion reais in terms of net revenue. Looking at the details of our different categories, still in the comparison year on year, third quarter 21 compared to third quarter 22, the principal highlight is the increase of average price in every category, above 20%, 29 for cookies, 28 for pasta, 25 for flours, margarine, and fats, 28%. And the other category, which is important to point out from the standpoint of strategic standpoint, this increase of 49%, this increase has a direct relationship with the two acquisitions which we made here in Brazil, Latinx, which has now consolidated its results in November of 21, and Jasmine, which started to be consolidated in September of 22. These two companies have products which have a higher average price than the MGS average price. At the same time, we've had this, with this price increase above 29%, expansion of volumes in cookies, pastas, which are the principal category, as well as flour had growth as well. Margarine and fats had a slight fall off. And the category of other projects had a large growth of volume due to the consolidation of these two acquisitions. In the sequential comparison, in third quarter 22 compared to second quarter 22, the category of biscuits, of cookies and pasta, these two categories together have 75% of our sales. We had increase in volume in both categories, 2% in pasta and 3% in cookies. Average price of 2% in pasta and 3% in cookies, with growth in volume of 11% in pasta and 16% in cookies. So it's a growth in revenue that's quite balanced between price and volume. In flour, and we had a growth in volume and revenue, and in margarine and fats, we had stability in the average price and an expansion in volume of 23%. And in the category of others, growth of average price, as well as 21% growth in volume. For the accumulated for the year, net revenue grows by 30%, 1% in volume, and 29% in average price. Average price growing in every category, and our volume growing in cookies, flours, and in the others category. Innovations, our launches, continue to contribute to the average price increase. We look at since the first quarter of 21, launches with prices above the average of MGS, 39 in the second quarter, and in this last quarter, a launch of 14 reais, which to show that we have a series of launches to show us the strategic trajectory which is being executed. Looking at the question of the most recent acquisition, Jasmine, which has an average price of 19.8 per kilo, highest per kilo, was consolidated in September, and Latinx with a portfolio very premium level with an average cost of 24.8% per kilo. Other launches which are happening already in the fourth quarter in the various brands of M. Dias. Here's a few examples. In Piraquê, premium crackers with an average price of 19 reais. Malted milk cookies, which is already a success in sales, with an average price of 20 reais a kilo. Tortinha Crostata, which is of Isabel brand, with an average price of 24. Lamin, Adria brand Lamin, with a growth of 12.8. Isabella brand Lamin, 12.8 reais. So all of this trajectory, which has been built for several years with a total connection to our strategy, has shown some examples, some concrete examples of those things which have already happened and are still happening. And we have a pipeline in this direction for the next quarters, for the coming quarters. Growth has also been very balanced. What we call our defensive area, commercial area, which represents areas in the north and northeast, and the attack regions, which represent the center, west, south, and southeast regions. In comparison, year on year, we had a faster growth in the attack area, which is where we have the biggest opportunity for growth and gain of share. We maintained our investments in marketing, as we commented every quarter, on the different brands of M. Dias, but we have prioritized some brands, especially Vitarella, Adria, and Fortaleza, which is the leading brand in several states in the Northeast. Going back to, we returned to fairs outside of Brazil, principally outside of Brazil, Cial, Expo Agas, Supermix, and the Future Trends here in Brazil, where we were principally with the brands of Latinx, Saudability, and these brands which are more attached to the pharmacy channel. A question of market share, the general vision is a stabilization and a recovery of market share. We present here on these graphs in the above area, the share of value, and in the lower part, market share volume. In the market share value in cookies, we had an expansion year on year and quarter on quarter. In pasta, expansion year on year with a slight retraction, quarter on quarter. And in flour, wheat flour, a trajectory of expansion of market share, especially outside of the Northeast region. As Gustavo mentioned, several years ago, we inaugurated a mill, a flour mill in Bento Gonçalves in Rio Grande do Sul, and this mill has been a platform for the growth of this category outside of the Northeast region. We're measuring it in tons. We had a slight retraction in cookies year on year, stability in sequence, and in pastas, again, year on year, a slight retraction in relation to the previous quarter, and in farinha, in flour, both in volume as well as in value. Looking at expenses and costs, our first message is in relation to the two principal commodities. The red line represents the prices in the market, the spot price for wheat flour, for wheat as well as palm oil, and this represents the average cost of our stock, the blue line. So up until July, for both commodities, we had a price of our stock below the market value, remembering that we always do hedging. So at this period from January until July, we were consuming the positions which were protected. And in August and September, we saw in our results the impact of the increase in prices, which happened in January to July. That's why our cost was a little bit higher than the market price at that time. But it's important to point out that the price in the market is presenting also another tendency of fall off. So at some point in time, this tendency will be observed in the MDS numbers as well. The price of commodities brought us to a retraction of gross margin in comparison year on year. And in the quarter on quarter, we had a third quarter with a margin of 28.6%, an impact of this situation of the increase of commodities prices. And for the year, we've seen an expansion of gross margin from 29.9, from 28.9 to 29.9. On the other hand, SG&A is under control. Remember, it continues under control. In the third quarter, we had an SG&A of 18.4% due to net revenue, with a reduction year on year and quarter on quarter, and an accumulated for the year of 21.6 to 19.7. This brought us to an expansion of EBITDA year on year of 286 million reais to 331, and a slight fall off in nominal amounts and margin from the second quarter to the third quarter. So what was the factor that provoked this fall off of EBITDA? It was the high price of commodities, as I mentioned. And for the year to date, we have an expansion of EBITDA, nominal EBITDA of 55% from 8.9 to 10.6. So we've gone back to double-digit margins for the accumulated number for the year over 2021 compared to 21. Net profit showed a tendency close to the EBITDA, stability year on year, with a slight fall quarter on quarter, provoked by this increase in costs, and expansion nominal terms of with a net margin stable of 6.3%. Going to the cash generation, debt, and investments. I'm going to concentrate here the explanation of our cash position due to the leveraging. We left a leverage position of less than 1%, which is we had more cash on hand than debt in the third quarter of 21, to a position of net debt, more debt than revenue than cash, 1.7 times EBITDA in the third quarter of 22. What provoked this increase in leverage? Two factors. One, an extraordinary payment of JSCP in the first half of 22, almost 600 million reais, and the last two acquisitions in Brazil, Latinex in November of last year, and Jasmine in the third quarter of 22. Those were the principal factors. Two principal factors increased our leverage from negative 1%, 1/10 of 1%, remembering that 1.7 times EBITDA is a very comfortable level of leveraging. And these other factors here, such as investments and CapEx, especially in systems and manufacturing, and others, which we have principally the increase of our working capital in our stocks for the increase in the level of service, which is one of our priorities, and also the results of the increased costs for commodities in terms of price per kilo, both for wheat as well as for palm oil. We maintained for the 5th year in a row the AAA rating, which is issued by Fitch with a perspective stable, the highest rating published by Fitch and a stable perspective. On the CapEx accumulated, it grew by 65%. On the quarter, grew by 65%, and in accumulated for the year, 37.6%. Two highlights: the beginning of the implementation of the SAC, which should open up in the beginning of 2024, and the adequation of our machines for the reduction in the grammature in the size of our packaging and flow packaging for certain categories, certain SKUs in the cookie category. MGS3 went up until Friday, went up by 6% versus an evaluation of the index of 7% as of Friday close of business. Looking at sustainability, remembering that since the beginning of this year, we started to publish our sustainability indicators, organized in the 3 pillars of our strategy of sustainability, which is care for the planet, believe in people, and strengthen our partnerships. So this is available. This report is available both in the presentation as well as in the results, and all of these have sustainability, have stability in this quarter. So we talk about water consumption, solid waste, losses in productive position, women in leadership was one of our priorities, frequency of accidents, seriousness of accidents, and purchases from local suppliers. Other events that happened in the last 3 months: the cleaning of beaches and mangrove swamps on the cleaning day, diversity programs, donation of food, training, health journey, and compliance. The ESG agenda touches on all of these items of sustainability, diversity, social questions, but also has a strong connection with compliance. So those were the highlights of our quarter. And so now I can pass it over for the section of questions and answers. We will now begin the Q&A session for investors and analysts. If you would like to make a question, please press the raise your hand button. If your question has been answered, you can leave the line clicking on that same button. Our first question comes from Thiago Duarte. Thiago, your microphone is open. Hello. Good morning to everyone, to Gustavo and everyone. I wanted to ask 2 questions, if possible. The first of all, which is focused on the question of volume. As you mentioned, we're very good during the quarter, and I wanted to understand you about the following aspect. We see the good volumes, but on the other hand, we also see a market share in volume, which is either declining or stable, even when we look at the different windows. So I wanted to hear what you would say. Why is that the case? Is it the industry, which is in fact general consumption in general, when we talk about cookies and pastas, which is very strong, very growing very quickly, or is there some type of that the market share is measured by sellout and the volumes that you report for sell-in, or would there be some kind of a temporary lack of connection between the sellout and sell-in numbers? And if you can tell us about how the share will look going forward. What are the two hypotheses are more reasonable for you? That's the first question. And the second question is a discussion that we've been having regarding your margins after recovery with the costs at the end of the line dropping. We have a more structural difference. You've been saying that you've been trying to make your EBITDA margin getting back to historical levels in the future. I wanted to know, with this preamble, if you could comment on a little bit on what are the differences between the company in terms of structural margins today compared to what it was in the past. Why am I asking that? Because when we look, for instance, at the changes of channels, we've seen consistently a fall off in the retail area and other cash and carry type of situations. This channel, does it cause a small fall off in the gross margin, even though it's helping a lot in the question of SG&A? I wanted to see how these two questions add up together to result in a dip in a EBITDA margin, which you consider to be balanced. This is Fabio. I'm going to start with your first question, which was the question of market share. I think that you even touched on the principal elements that explain our market share numbers. It could be that there is some delay in the reading of the numbers, so we don't disconsider that. But another point which I believe is even more concrete, the question of the reduction of the packaging. And as we commented, now here I'm talking about market share for volume, to explain the volume market share. Since I looked in recent quarters, MDS went through this process a little bit after its competitors did, due to the fact that we've had more factories, more brands, and it's a very complex process. So as we have done previously, we had an unfavorable impact on the market share. Later, we reduced the size of the packaging. You lose a bit of volume, or either in kilos or in tons, which winds up becoming reflected in the market share, volume market share. However, we see that the market share value, it was a little bit better than the volume market share. So at some point in time, the market share volume will happen to the value as well. Value and volume will catch up. The question which you also put it between sell-in and sell-out, we do not see today any problem, because we monitor the stocks in our clients, and we have a level which is quite a reasonable level of stock. You might remember that in 2018 and 19, we had a situation, an unfavorable situation of coverage of stocks, a very high level of stocks in the clients, something which was corrected in the beginning of 2019, but it's not what we're seeing now. Today, we see stock levels in our clients which are very, very adequate, approximately 30 days of stock, without volatility. It's quite stable in recent months. So summarizing today, yes, there could be some delay in these numbers. The question of the size of the packaging is a factor. It could explain part of the market share of value versus volume, and the stocks in the clients are at a reasonable level. Thiago, this is Gustavo. As far as your other question, answering your second question, talking about structurally, the company is always seeking profitability. I would say that the company is in a structural, notorious structural moment. The tools which were implemented in recent years, comparing to what we had, makes a huge difference. So evolution of the market, evolution of the trade, with concept stores, with people looking at we have the correct mix at the price, at the correct price, and the right position on the shelf. Focusing on the questions of added value, value added, leaving for para later, for later, the products with less value. These are questions which qualify better our portfolio, seeking this margin. The area of pricing, we had an infinity of prices. Today we have a culture which is more reasonable for pricing, and we don't have that cannibalization between our channels. And we now have one more director of management who's got his feet in the area, Leonardo, both for the daily numbers for the managers, as well as the volume plus the profitability, which is in everybody's mind. We think that when we look at the structure and the mindset of the company and the tools which were implemented over time, structurally, the company is much better prepared to capture these better margins going forward. So I'm not afraid of erring, but unfortunately, with all the changes that we have made over these recent years, and the implementation of these tools have not yet given us the effect that we expected or hoped for, basically due to this question of the pandemic, the war, and so forth, which are covering the results which we imagined to be able to capture. Basically, because all of this has become a much more volatile market and much more challenging. Every commodity has been going up. The exchange rate in Brazil, Brazilian currency, it's difficult to have an increase in commodity prices and a devaluation of the real at the same time. So this has been a persistent problem. We have 10 months of war and 2 years of pandemic, and so we're in a very challenging situation, not only in Brazil. The result is still effectively very, but I'm sure that structurally we're much better prepared to capture and improve these margins and much more challenging margins. That's basically it's that. Very good. Thank you. Very complete. Thank you for your answers. Our next question is from Pedro Fonseca. Pedro, your microphone is on. Hi, Gustavo, everybody here at MDS Branco. I'd like to make 2 questions. My first is if you could give us a little bit of an update of what you see in the way of consumption in the 4th quarter, whether you'll have a consensual looking at more growth, but look what you're seeing in the way of volume, but also in terms of price and how these two converse with each other with the graph that you showed, which is very interesting, of the costs of the commodities prices. How do you see this competitive scenario with the fall in the price of wheat? And I think nobody has such a good hedge as you have. And how do you see the competition moving in this question of price? And how does this look at your possibilities for readjusting prices? That's my question. Thank you. Thank you. I'm going to answer then. Fabio, I want to add in. We're going to continue going forward, doing well. We put, I believe, in the last call, we put a price list in August. It went into effect completely in October. It's a very newly instituted. It could be that the volumes continue to grow. We're in the phase of analyzing certain markets due to the prices of our competitors, which has not yet come back to us, and is affecting some categories. However, it's a normal movement in our view. It happens every time. We work in the market for a certain time. We go in front with price, and then we suffer, and then leading this process of pricing, and the competitors take a little longer to catch up. So we're in the phase now of waiting a little bit, waiting for the appearance of these competitors to give you a more effective answer. However, in principle, looking at the volumes in general, no yellow lights have come on as yet. What I want to talk to Fabio about, when we look at the market, the demand for cookies, pasta, and flours, we see stability year on year, which is normal for these markets. These are very highly penetrated markets in Brazil. They're present in almost every house in Brazil, every household, and are greatly due to a perception of value, due to the readjustments which have been being practiced but by the majority of the players in these markets. So it's a scenario of demand, which is a good demand, strong demand, and we have a perspective, a positive perspective for the coming quarters. Thank you. Understood. Our next question comes from Rodrigo Almeida. Rodrigo, your microphone is open. Oi, Thiago, Fábio. So, two questions, more specific questions, temporary, about the current moment. At this point, first of all, I have to understand a few points of some financial effects this quarter. I think that in relation to the accounts for accounts which are reserved accounts, and I want to ask you about the nature of this effect on the cash flow in the quarter, and the behavior of the working capital behavior, and how we should be thinking about this going forward in relation to how we in the fourth quarter scenario, the fourth quarter for stabilization of costs and our average price as well. How can we look at the working capital? And as we see in this quarter, it would be interesting. The second question is related to exchange rates. If you could give us an idea, it would be very interesting for us to be able to model this. What do you see in the rate of dollar, the hedge that you've done in the company? What can we expect for exchange rates with the dollar in the coming months to have a cost basis beyond the data which you already share with us, which is already very interesting? That's all I have on my side. Rodrigo, it's Gustavo here. In terms of hedge, we don't give too much guidance to not upset the people in this commercial area from their pricing with their competitors. But up until December, we have an exchange rate hedge close to 5 reais. Going forward, I'd rather not give a clear answer, not give information to our competitors. As far as the financial questions, the increase of our net debt, I would say that majority of this, our question is not a question of capital that could just move around. The first is the distribution, almost 600 million reais, which was spent on acquisitions. So the Jasmine brand, as well as the JCP, were the big offenders in our net debt. Since the company generated enough cash, it should have been replaced over the next few months. This gave us an increase in debt. That's what we're seeing here. And we see that this effect, the debt is a little higher, of course, higher cost. And then Fabio can also can open up a little more for you. There's a exchange rate variation has an effect looking at the hedges for palm oil, so sugar and other commodities, and in our accounts receivable. But the principal effects of that in working capital, we don't see more consumption, a relevant increase in the consumption. There's an important adjustment in the last quarter, which we've been talking about. We're investing a great deal in the level of services. We understand that there's lots of opportunities there, And so we contracted a supply chain director, and we're doing some changes, including the definition of the minimum stock for each one of our units. We're talking about products that are ready to sell. We increase our stocks a little bit, but looking forward, we see no provision of great consumption of this stock. Thank you, Gustavo. Thank you very much. Have a good day. Our next question is from Victor Romano. Victor, go ahead. Good morning, everybody. Good morning, Gustavo, Fabio. Two questions. First is a quick question. I wanted to understand, especially in your market share in flowers, it did a good recovery from the 5% that you were at in 21. And I wanted to understand that dynamic. What do you owe this recovery in share? Is it a question of price or what? If you can give us a little bit of that dynamic, thank you. The question after that is the pass-through of prices. When we look at it carefully, we see 34% year on year, which is quite robust. But my question is, do you think we still have space to increase prices? And so when we look at 2023, we believe that prices should continue at the same levels. That's from my side, that's what we have. My side is Oriana. Our share of flowers is a sector that we've decided to look at very closely under the microscope. We have two segments, which is industrial flower, which is a B2B business. We sell to industries and bakeries. And then in those cases, the margins are lower, but the flour coming from Mexico our mills, with all of this confusion of costs and exchange rates, had their reserve capacity. So when you have reserve capacity, you don't lower your fixed costs. So we've taken some actions at the point of sale, not in question of price, but in execution, so that we can advance in the sales of flour. So it says execution at the point of sale. In relation to price, if we didn't have this inflation, our will would be not to add to the prices, but going forward, we have inflationary pressures. And what we've seen is that we've placed this in a very tangible way, and we have advanced. We haven't given any big, relevant, specific problem. Things have been growing month on month, semester after semester, and we're foreseeing one time increase. I can't talk about it too much now, right now I can't talk about it too much, but it will depend on the scenario, on the global scenario. But we should diminish a bit the intensity of price increases in any event. There is space. We understand that we can continue at least rebuilding our margins so that our costs, we don't want to recover this through prices. I'm talking about our table. I'm talking about our tables, our price lists, downsizing, promotional packaging, portfolio. But the company has to find alternatives to minimize the effects of these costs. If they continue to go up, we're going to continue on this trajectory of improvement of price overall. What I can't say is that looking at this year, this last quarter, last quarter, which was starting out in the fourth quarter, and the quarter that you just ended, that prices have continued to rise. That's because costs have gone up. So the costs have started to come down. We see lower price on commodities in this quarter. So we should have a better relationship but the world is still quite upset with all these political questions. However, for now, we still see space for a recovery, an increase in costs, and the recovery of margins. Our next question is from Gustavo Troiano. Gustavo, please go ahead. Good morning to everyone. Thank you for your question. I wanted to explore the theme of market share volume versus value. Talk about the performance in the value. I wanted to understand if this justifies all of this performance of the share value above volume, or if there's another factor related to the mix, because the performance of the value can be attributed only to mix. So I want to understand price and mix so we can make an analysis in terms of the expansion of Piraqué or in the attack zone or region, comparing price increases compared to the downside. And that's the first question. And the second one, I wanted to explain a little bit more about pricing, more related to the question of prices of our competitors and rational pricing of the industry, especially in the pasta and cookie areas. I wanted to understand if this market share of value has gone up more than the industry in this case. Can that be attributed to a reduction of price of the competitors in these categories? And if you think that there's more space to do a downsizing in M. Dias, do you think that your portfolio today is at the right size? Or if you see margin to be able to reduce and pass this price to this dynamic? This is me again. Talking about the downsizing, it explains part of this. It doesn't explain everything, but explains part both in biscuits and cookies as well as in pasta. Another question are the readjustments, which we saw in 2022, is that the majority of our competitors made adjustments, price adjustments. However, since M. Dias took off first, this brought an unfavorable impact on our volume. However, it is an impact which has a temporary impact. That's why we see the behavior of market share value compared to market share volume. The other question that you said of the mix also explains this. There's not just one explanation. It can be a mix of several factors. The fact that Piraqué is growing more than the other brands of M. Dias brands is due to the behavior of the market, of the value market share rather than a volume market share. The market has a price which is 60 or 70% above the average of the market in the cookie market. So the more this brand grows in the mix of M. Dias, the better is our average price, and the better is our value market share compared to the volume market share. So it winds up being a mixture of these factors. We prefer not to open it, which one is more important than the other, but it is possible to say these are the impacts that are similar between the two. The other question you asked is, there's more reduction in the size of packaging. No, this agenda is basically concluded in both categories, as well as cookies, as well as pastas. It's a process since we started to observe in the market and the middle of last year. We did this shortly after that. I was looking at this, the first question of the call, the fact that we have a lot of factories and more than 100 production lines and more than 20 brands. It was a process which it took longer for M. Dias. However, it is now practically concluded. But we could be a little something here and there, but for cookies, the majority of this process is concluded. Another point that you asked about is if the competitor is lowering prices. No, we haven't seen that movement. Last year, we saw some competitors who did not increase their prices, or didn't increase their prices enough to compensate the increase in prices. However, during 2022, we saw the market following a trajectory which is very similar. Costs still high, and the market had to make some readjustments. However, for M. Dias, the readjustment of price is important. Yes, it's important. However, it's not the only lever to increase our average prices. There's price readjustments, there's the mix, work on our packaging, the Piraquê brand, our acquisitions, the launches. The average price went up due to all of these factors. I think that I hit all of your points. If anything's missing, please let me know. No, that's good, Flavio. That's very clear. Thank you for your answers. Thank you. The question and answer session is now closed. We would like to pass the word over to Gustavo to make his final comments. Thank you for the participation. Once again, Fabio, Rodrigo, Eveline, Fernando, Castillo, we're always at your service. If you know our day-to-day, and we can contact us on our day-to-day, continue to speak with us, any questions you might, any other information that you might need, any doubts or questions result to these results. We're always at your service. Thank you very much, and I wish you all a good week. The video conference of M. Dias Branco is now closed. We thank you all for your participation. Please have a good day.